Markets are a little all over the place today, and there is something in the charts that has never happened for Bitcoin in its history, only happened a few times in traditional markets that we're going to take a look at. That is not a very good sign for the markets, but not terrible either. So let's jump in and take a look at what's going on. Markets kind of all over the place today, started up a little bit, then down. And now they're rebounding a little bit in the afternoon, except the NASDAQ, which Apple and Tesla are kind of weighing on today as those stocks sell off a little bit, even though Tesla um, out, outpaced their production, but still with other issues in terms of missing on guidance. That's bringing the stock down a little bit. It dropped 14% after the electric automaker reported fourth quarter vehicle production numbers for 2022. Deliveries of the closest approximation of sales. The company reported 405,278 total deliveries for the quarter and 1.31 million for the year. These numbers represented a record for Tesla, but they fell shy of the analysts' expectations. So that's why the stock is down a little bit. Market share concerns, and then of course the alienation of customers is continuing to weigh on Tesla a little bit. But the biggest thing is market share. Everybody else is getting to the EV game. There's good products out there and things like that. So that's going to continue to put pressure on Tesla and Tesla stock, which arguably is way overvalued in terms of what it really is from a car company standpoint. And of course, the argument is, are they a tech company? Are they a car company? What's the real valuation? And as we've seen, tech companies are round tripping, some down as much as 90, 95%. So that's what's weighing on Tesla today. Apple is continuing to drop as well as concerns with chips and things like that, recessionary environment, and how that could further hamper tech stock performance and purchases of devices and things like that. So recession concerns like we've been talking about in terms of what the issues are into the new year. So let's take a look at Bitcoin here, still kind of consolidating, popping up and down a little bit throughout the day. Solana is the big winner here lately with a 70-something% pop off of the lows from December 29th. Right now, it was up as much as 70%, has rebounded a little bit, still up 59% from that December 29th low. So Solana getting a little bit of action there. Somebody definitely moving that market and manipulating that price. This is obviously not, retail just jumping in at scale and driving the price up. Again, Bitcoin kind of consolidating. So let's take a look at what I'm talking about. Let's jump over to the weekly chart. Let's put some moving averages on it. And what I'm looking at that has never happened in Bitcoin's history is this weekly death cross, the 50-week crossing the 200. Never seen that in Bitcoin's history. It's come close a little bit early on, right around the 2015 timeframe, but didn't actually cross. That was after, obviously, the 2013, 2014 peak. And not very much time in its existence there for these weekly averages. So, easier to move versus as we get along further in time, a little bit more, takes a little bit more price action to move, but you can see this weekly death cross coming. So let's take a look at the next closest thing we have in terms of what this looks like for traditional markets. I'll turn this off a little bit here, and let's take a look at the Dow Jones on the daily. Still kind of consolidating in this area, a little bit up and down right there, trying to figure out what its next move is going to be. Same thing with the NASDAQ and the S&P. Still looking for a little bit of a bounce before we continue to drop to the downside. And we have the VIX kind of consolidating a little bit in this area, looking for its next move. Dixie up a little bit today, while the 10-year is down a little bit on the day, but did rebound. So, a little bit of just uncertainty in the markets right now, repositioning investors, kind of moving their chips around, getting ready for earnings season, the next inflation report, and the Fed's response in February. So the typical suspects. But let's go ahead and jump back to the weekly chart. Let's take a look at this death cross on traditional markets. And we can see the Dow is setting up for one as well. Didn't have that in the March 2020 sell-off. The last time we saw a weekly death cross on the Dow was 2008 and 9. There's a lot of similarities in the market action right now as there was in 2008 and 9. So let's take a look at what happened there. When that death cross occurred in 2008 and 9, the market continued to drop from that point, when it actually happened, somewhere around 28%. On the Dow, we take a look at the NASDAQ, same thing. The last time the NASDAQ had a weekly death cross where the 50 dropped over the 200 was in that 2008, 2009 timeframe. And from the point that cross occurred, the price dropped somewhere around, not as bad as the Dow, 15%. The S&P, let's take a look at the S&P, same thing, 2008-9 timeframe. This price action here so far into the bear market is very similar for the NASDAQ, the S&P and the Dow as it was 2008-9. It's this big drop here when banks started failing in the Lehman Brothers collapse, Bear Stearns, all those things started happening. That's, when this big collapse happened that potentially spurred this cross and was a catalyst for the price action following. So what happened on the S&P after that death cross? It dropped basically 29% there. And then prior to that, it was 2000 when that happened, and much bigger drop if you look at where the death cross occurred and what the drop ultimately was. There was 35%. NASDAQ in 2000, that was a big drop from that point where the death cross occurred to the ultimate bottom. Maybe not as bad as the S&P. Let's see what that looked like. So that was around, that was a 50% drop. So that was much worse. And then the Dow, I guess, is what I'm thinking of back in 2000, that probably didn't drop as bad or as severely as the S&P potentially. And the NASDAQ, well, I don't know, maybe it did. Let's take a look at it. Let's see what we got here. This is where it crossed right here. And if it drops down, it was 27%. So that was still a significant drop back in, 2000, 2002 timeframe. And prior to that, you have to go back to, on the Dow for a weekly death cross, you start getting all the way back to right here in 1982. Then before that, it would have been 1978. Then there was another one before that, 1974. And then 1969. Here's a brief one. These are brief ones here in 1967 when I was born. And here's another one in 1962. So you can see it doesn't happen often. 4 or 5 in traditional markets, never in the history of Bitcoin. And that drop is fairly significant for the indexes. Here's the Dow, not quite there yet, a lot closer on the NASDAQ and a lot closer on the S&P. And let's take a look at what the price action looked like back then. So here's the S&P right now, and this is how many weeks into the bear market are we? Right now we are 365 days, basically a year. Well, yeah, we're a year because January was the peak of the market. So we're about a year into the bear market right now. So if we go back to the last real bear market was 2008, 2009, and that was October to October. Let's see what that looks like. So a year, we already had this big collapse right here. So it kind of worked its way over until the bank started collapsing a year later, and that's when you had that big capitulation. There's a couple of people out there that are comparing the S&P 2008 and 9 to what's going on right now, and I think it's tracking pretty well, except for this big drop right here when the bank started collapsing. So that's going to be a little bit different this time. Let's take a look at the NASDAQ in 2001, because that's more similar to what 2000, 2001 timeframe. So it was peaked in March of 2000, and 1 year later, March of 2001, was right here in this area. So it already had followed the majority of that drop down, kind of big drop to that first bottoming, about 71%. Let's see where we're at on the NASDAQ right now in a year. Let's see, if we look at the NASDAQ so far has dropped 37%. So nowhere near where we were in 2001, but let's take a look at 2009. So 1 year on the NASDAQ from October to October, same thing again. So that was a pretty significant drop there. But again, you had more going on. That was a 56% drop basically. And that's when the Fed intervened, right? When all the markets in 2009 dropped about 50%, the Fed jumped in at that point, Treasury jumped in, and this was, all kinds of intervention going on at that point. So does this mean anything is imminent or going to happen? No, it just means that it's interesting to see these averages coming together like that. The bear market in the process of where it's at 1 year after the peak. Right now, 1 year into the bear market. And typically, how long do these bear markets last? Let's take a look at that. Again, very different environment. Let's just look at the S&P just so we can kind of consolidate. Very different environment back here before the Fed pivoted. But basically, that was from the peak. Well, this was a double top. So we'll just take the final peak, October of 2007 to the bottom in March of 2009. So that was basically 74 weeks, 518 days before that played out. And if you go back and look at the 2001 time frame, that was basically the final bottom came in 154 weeks later, 1,078 days. So these things can take quite a bit of time to play out. So far, again, we're only at 54 weeks. So nowhere near even the time it took for the 2008, 2009 bear market to play out. So we've got a lot of real estate ahead of us, a lot of stuff to work through from the standpoint of where is the economy when it comes to a recession, where is the consumer, how strong is the consumer. We're going to start finding all this out here real quick, because all of the post-pandemic cabin fever spending is over. The holiday spending is over. We have, potential, obviously, the repercussions of layoffs, taxes coming due, Christmas bills coming due, things like that. So there is a lot of stuff on the headline for recession watch that we're looking at. And then, of course, we're going to get the inflation numbers. Earnings season is going to come out. We'll see how companies, not only how did they perform in 2022, but what's their forecast for 2023. A lot of companies are not giving guidance just because of recessionary concerns. So these are the things that are weighing on the market right now. These are the things that I'm looking at. I'll see you on the next video.